Welcome to We Chat Divorce, hosted by Karen Chellew, Legal Liaison, and Catherine Shanahan, CDFA. Each episode, we sit down with divorce professionals and industry experts to provide insights and frank discussions about real people, real situations, and real divorce to help you achieve your best life post-divorce. This episode of We Chat Divorce is brought to you by My Divorce Solution, offering divorce financial planning so clients can secure the divorce settlement they deserve. Visit mydivorcesolution.com to request access.
Hello, everyone, and welcome back to We Chat Divorce, where we break down the messy, emotional, and often confusing parts of divorce and help you make smart, informed decisions every step of the way. I'm Karen Chellew, Legal Liaison and co-founder of My Divorce Solution.
And I'm Catherine Shanahan, Divorce Financial Specialist, CDFA, and co-founder. Well, the other co-founder of My Divorce Solution. We are here to give you the financial clarity that you need so that you can take control of your divorce, especially when it comes to your money and your future.
So today we're going to talk about marital settlement agreements. A marital settlement agreement can bring your divorce to a close, but it can also lock you into mistakes that are very difficult, expensive, and sometimes impossible to fix later. This is where people get into trouble. They go to mediation, they attend a court-mandated mediation, they participate in a settlement officer conference. Everyone is tired. Everyone wants it to be over. Someone says, "We have a deal." Papers are signed, terms are summarized, and there's a real feeling of relief. But then the formal marital settlement agreement has to be drafted. That's when the problems begin, because broad settlement terms are not the same as a complete divorce settlement agreement. A mediation summary is not always detailed enough to become a workable MSA, term for marital settlement agreement. And if the assets were not verified, if the income was not understood, if the tax impact was not modeled, or if everyone was operating from different assumptions, the agreement may have been doomed before it was ever started. So today we are talking about what a marital settlement agreement is, what should be in it, and why we often advocate slowing down before final terms are signed, especially when the financial picture is complex.
Well, before we go on to that, you said, there's a sense of relief when people think that they have a deal. I don't know that anyone ever feels that after mediation. They almost feel like, am I relieved or am I pissed off? Or do I have buyer's remorse the next day?
Yeah.
And it's because some of the things that you just said, what a mediator writes out is not your formally written out marital settlement agreement. And so you look at that the next day and you say, well, wait a minute, somebody missed what I thought was said. Or did I think something happened? Am I at the wrong here? That it didn't really, because it's not in that temporary agreement, or I don't even know if that's the word. It's not in the mediator's language, basically. And it happens all the time. And people are exhausted. So when the marital settlement agreement comes, it gets even worse because the legal language is added. And all of a sudden you're thinking, wait a minute, that wasn't even discussed in mediation.
Right. And these types of mediated agreements, can come from attorneys sitting down with the clients. They can happen in all forms of agreements. It's not just mediation. It's all kinds of temporary hearings or whatever it may be. But what we're talking about then, when it needs to be formalized, that's where the problems begin. Well, that's where the problems surface, right? A lot of times people go to these discussions without the necessary information. And that's what we're talking about today.
Well, even when they have the information or they think they have the information, when it goes into pen and paper, it gets a little blurry.
For sure. So we're going to get into that today for sure. Hang on to your hat, as I say. All right, so let's first just talk about, what is a marital settlement agreement? So at its most basic level, a marital settlement agreement is the written agreement between divorcing spouses that resolves the major issues in divorce. Depending on the case, it may address property division, debts, real estate, retirement accounts, businesses, support, insurance, taxes, reimbursements, parenting-related financial obligations, and any future steps needed to complete the settlement. It's the document that turns the deal into something enforceable and actionable. And I should say it's the document that's intended to turn the deal into something enforceable and actionable. But here's the part most people don't realize until they're in the middle of it. The MSA is not written in the mediation room or at the agreement time. The mediation, the settlement officer conference, or the negotiation produces the terms. The attorneys then draft the formal MSA from those terms. The attorneys are the ones translating whatever was agreed to at the table into a legal workable document. They are also the ones who build in the enforcement language, the protection provisions, the deadlines, the transfer instructions, and the consequences if one spouse does not cooperate. So that's why the quality of the mediated terms matter so much. And more than not, just based on our 10-year history of doing this and our professional experience, how we could go on and on about how the terms come to us. Red lines, highlights, scratched out language, signatures all over the place. Sometimes it's almost impossible to even untangle what was agreed to or what people thought they were agreeing to at the mediation or the conference. So when the agreement says, let's just say this is where confusion comes in. Let's just say the agreement says husband will retain the business. Well, that's not enough if no one has clarified whether the business has debt, retained earnings, shareholder loans, tax liabilities. We could go on and on. Or how about when the agreement says wife will receive one half of the retirement? Well, that's not enough if no one has identified the actual account, the valuation date, the premarital portions, the loans, the gains, the losses, survival benefits, et cetera, et cetera. So a marital settlement agreement is supposed to bring clarity, but if the financial foundation is unclear, the MSA may simply formalize confusion.
That's exactly what it does. Formalizes confusion. You know, there's a lot of times that people want us to help them execute their marital settlement plan post-divorce. And when we read it, it's so confusing. Like, wait, what was the intent here? You know, it happens all the time in every state. The goal is that you get that all cleared up before you sign that agreement. But again, everyone is in fatigue and people don't recall what their notes said and all of that. It's a mess. I actually think long mediations is not a good thing to do. I don't think it's fair for any of the parties, including the mediator, because oftentimes they can't recall their notes, what it actually meant, because they're exhausted and they're not living those assets and debts. So it wasn't their marital estate. They're once removed from it. So how are they going to recall the intent? For example, like you gave, husband will retain the business. What does that actually mean? You know, and is that really releasing spouse of all liability to the business if it's written like that? Was everything disclosed? Were you leaving anything, you know, there? What if husband sells the business? You know, there's so many things that need to be addressed. And you have to be clear on before you actually sign that. I mean, Karen, I think that actually happened to you when you got your divorce.
Yeah, it absolutely did happen to me. So my spouse got the business. However, what was overlooked by everyone at the table was that I happened to be the president of the business for a variety of reasons, for tax purposes, for women-owned business purposes. And yeah, did I have a part in the business? I absolutely did. However, when my spouse filed bankruptcy a year later, guess who they came after? Guess who was still president of the business? Oh, that would have been me. Mm-hmm. So those kinds of details are critical and imperative to cover. And it's really hard to do that. And when you're dealing with a document that has very vague terms, when someone hasn't already identified that issue and confirmed what needs to be done post-divorce if one spouse or the other is retaining assets. So from that space, a lot of people assume the danger happens at trial, but what we're expressing today is the most damaging financial mistakes happen before trial, during these settlement discussions. So we're not saying that settlement is the problem. We're not saying mediation is a problem. The problem is settling before financial facts are known. There's a big difference between saying we're ready to resolve this and actually having enough information and conversation and negotiations to resolve it responsibly. So this problem persists even when attorneys are direct participants in the mediation. Having counsel at the table does not automatically mean the financial picture has been verified. Attorneys are focused on legal strategy, as they should be, negotiation posture, reaching resolution. In these types of situations, the focal point is not always to confirm whether every count has been identified, whether values are current, or what values anyone happens to be using. When these details are missed at the mediation table or in any settlement discussion, there's problems. The vague language survives because the underlying clarity was never created.
Well, I have a couple thoughts there, because there are cases where the data is there. Mm-hmm. But there's so much confusion when you're going back and forth because people do not know where they have to compromise. We do modeling scenarios with our clients because you have to know that you're going to compromise. You don't just get your A scenario. It's really rare that you would get everything that you ask for. Where the problem comes into play is that when they deviate off of that and you're not prepared for another scenario, you don't know how to react. So it ends up getting a big cloud of confusion. And you're not looking at documents when you're in mediation. You already have to have that view before you get to mediation, which is our point. But you also have to know where you're going to compromise. What is your risk level for compromising, or your ability to do that? Because if not, you're going to get what do they call it when you plow someone over? What's the word?
Plowed over?
Yeah, okay. You're going to get plowed over. If you're a farmer out there, I know it's not the right term, but you will. And then the next day you wake up like, I'm not signing that agreement. I don't want to sign it. And then here we go. We have to start all over again. The other point, you said something that, being prepared, God, I hate to share this story because it's so embarrassing, although I'm not sharing any names. Literally, I was in the mediation and the mediator had the audacity, or I don't know. He put himself in a position I find to be very embarrassing by saying, listen, this is a complex case. It has 30, 40 accounts, bank statements. I'm only used to dealing with 6. So this is confusing to me. And I'm sitting there like, wait, what? Why would you take the case? And how are you going to help this couple negotiate that if you're admitting that it's too many accounts for you to process in your head?
And don't you think, Catherine, that a lot of people come to these discussions with a real asset that they really attach to? Like, this is one thing I want more than anything. And so if throughout all the discussions, they believe they're walking away with confirmation that they're getting what they wanted, but how many times do they not realize what they just gave up to get that, right? And then what the implications are to retain that. I believe we see that all the time.
Right. Those are all the considerations. So you really want this asset. Okay, great. But what are you negotiating away? And what do you have to consider when you keep that asset? Did you really want that asset? Especially if you didn't want it the whole way through your process. And now all of a sudden at the end, you think, oh my gosh, I do want it.
So this is why we often advocate waiting before turning broad mediation terms into a final MSA. Because once you start changing one term, because the next day you're going to feel regret, as Catherine was talking about, because you didn't understand the implications of what you just agreed to. And so you want to change the terms because you realize that it may not be equal or equitable. It can create a domino effect. If the business value changes, the equalization payment may change. If the equalization payment changes, the support structure may change. If support structure changes, the tax impact may change. If the tax impact changes, the cash flow may change. If the cash flow changes, the feasibility of keeping the house may change. That is why details matter.
And if you were in a good mood, you might be in a bad mood the next day.
Yeah, that's so true. How many people wake up the next day, or even the moment they walk out of the negotiation, have this dread about them that they feel that something's just not right.
Mm-hmm.
Yeah. So we're going to go into a couple case studies. We've seen cases where court mandated mediation settlement took place, but no one was on the same page about the complex assets. The parties thought they had reached an agreement, but when it came time to draft the formal marital settlement agreement, the terms just didn't translate into a workable document. The business interest had not been clearly identified. The ownership structure was not fully understood. The valuation assumptions were not aligned. There were questions about distributions, tax obligations, future income, and whether certain assets were even divisible in the way people thought they were. So now, again, we were saying this over and over. How do you draft an MSA based on those very vague and undefined terms?
I love when we've gone back to attorneys and actually asked them that question after reviewing someone's MSA. And I love how they say, well, the financial planner will deal with that after the divorce.
No.
Right.
I was just reading one yesterday from one that came through in the last 2 weeks for us. And right out of the gate, one spouse is retaining the house and they have to sign over a quitclaim deed. And I'm looking at it, well, there's no refinance provisions for the spouse who's retaining the house. So that's a huge problem. How do you sign over a deed if your name is still on the mortgage? Were those provisions not talked about? And that was on page 1.
Mm-hmm.
It's crazy.
It's frustrating.
It is. So when we talk about these things, financially executable is the key phrase. Some agreements sound very fair in the room, but they just don't work on paper or on the execution. When you get to how is this all going to work, that's where things start to fall apart. Or they work on paper only if every assumption is correct. And in divorce, assumptions are where everything goes sideways.
What do they say about assuming? Don't make an ass out of you and me. Is that how it goes?
Yeah.
Don't ever assume anything with this because assumptions never work out. Be a pain in the neck now to get your details right. And if the details are not correct, do not sign it.
Yeah. When you're going through the divorce process, Catherine, that's a really good point. You really have to develop a mindset of insisting on that things be clear. Don't allow yourself to be diminished or I don't even want to say disrespected, but if you have a question, it deserves to be answered. If things are not clear, you deserve to have them cleared up.
And you have to remember that the character assassination that you will receive from the mediator, maybe even your own attorney, or the mediator telling you what your spouse is saying in the other room should be ignored. Don't let that get under your skin. Don't defend yourself. You don't have to. Just don't listen to it. Stick to the facts, stick to the data, stick on what your compromise is, and stand up for yourself. Because that's the only way you're going to understand what your agreement is post-divorce anyway. When you stick just to the data, not the emotions. And every mediation that we're in, it's there. All that emotional warfare goes on, and it really dismantles somebody's mind. And that's when you have a lot of regret the next day.
Right.
Because you let them get to you.
Exactly. And mediation, a lot of people don't understand that the whole purpose of mediation in these settlement conferences is to get everyone to a settlement, right? It's not to assure that you're clear. It's not to assure all of the details. The goal is to let's get this settled so these parties can move on, which on its face seems appropriate. However, if you're not confident that what you're walking away with meets, all of your post-divorce needs, there's problems there then. And so that's why you have to take the onus of being informed and knowing what the financial impact is with any option or any scenario that's presented at the table.
Well, let me just clarify that a little bit. I don't know anyone's needs that are fully met after mediation, right? So
Right.
it's not always about knowing what your needs are, because the other side's never going to agree with what your needs are. But again, I'm going to circle back to the data to support the documents to support the data, so that you're making realistic decisions based on what your needs are. But it has to be based on realistically what's available there, not what you think is available or what you believe should, or what your opinion is on what's available. What's the actual facts that they're going off of a mediation? Because whatever they tell you before then, the mediator sticks to that balance sheet that they're looking at.
Mm-hmm.
So be clear on what those numbers are and be able to defend them.
Right.
And be able to ask the other side to defend them as well. That's just as equally as important, because that's what you say to your mediator. Can you go to the other side and ask them for the document to support that number? You can say that in mediation.
You can. And even though Catherine, I think you just this week were at a mediation where they were relying on balance sheets and valuations where the mediator was clear that there was no supporting documentation. They're taking it at face value. This is what we have. This is what we're using. And,
yes,
that exactly is mediation so many times.
Mm-hmm.
Yeah.
I remember saying, well, listen, as a CDFA, I cannot verify that number unless you show me the document. And then he asked to verify our document. Okay, well, if you don't need the other side's document, why do you need our documents? We have them.
Mm-hmm.
But it was just like calling them out. Like, what's good for the goose is good for the gander. Is that the right saying?
That's a good one. Yeah.
Yeah.
So let's talk about another case study where the mediated agreement, because it can be rushed, right? Things get moved around on spreadsheets and recategorized and reorganized. It's not uncommon for us to find missed assets in the rush to get signatures. So look, every state and every case is different, but this is where legal counsel matters. From a financial clarity standpoint, missed assets create immediate problems. Was the asset intentionally hidden? Was it, removed and no one noticed, so they just left it that way? Was it accidentally overlooked? Was it disclosed but not valued? Was it referenced in the documents but not included in the summary? A missed asset can affect equalization. It can affect support. It can affect liquidity. It can affect whether one spouse can refinance a home or not. So the MSA is supposed to resolve these issues, but if the agreement's coming back and those assets are missing all of a sudden, then we need to know why, and we need to know on what basis they were removed, whether it was intentionally or not intentionally. I remember we had one just recently where an entire property was removed, and it wasn't even intentionally, but it was not on the balance sheet. It was not a part of the mediated agreement. And so now what do you do with this? It wasn't a property that was missing. What do you do now? Go back to square one? Because remember, we were just talking about when you have one asset, that's the issue. There's definitely a domino effect.
Mm-hmm.
So another case study, miscalculations and the ripple effect. We've also seen cases where the issue was not a missing asset, but a miscalculation. The settlement terms were moving forward, but the numbers behind the agreement were not lining up. There were calculation issues that affected the overall division. This is what people often do not understand. A divorce settlement agreement is interconnected. The house, the retirement accounts, the business value, the support number, the debt allocation, and the cash flow after the divorce, they all interact with each other. And when one number is wrong, the agreement may no longer produce the outcome people thought they were accepting. So, Catherine, do you have a couple case studies of sorts that you can relay that to?
I had a great conversation with an attorney negotiating, helping our client to negotiate without an attorney, right? And he gave me a long song and a dance on why his client should receive his retirement accounts 30% less because of the taxes he would have to pay. Okay, well, in theory, that sounds right. We're going to compare it to a cash account, trying to make it apples to apples. But then I asked him, well, why is wife not getting credit for capital gains on the home? Well, he said, well, whoever keeps the asset gets the taxes associated with it. And he goes on and on and on to explain to me about that. And I'm just listening to him. And I said, okay, attorney, I won't say his name. Well, then if husband is keeping the retirement accounts, why is he not keeping the taxes? Well, he had to explain a whole nother theory that he had for that. Well, that's not right. That's not comparing like assets. That's not making it fair the whole way through or equitable. So you have to really know if we're using gross values on taxable accounts or non-taxable accounts. What's the effect to that? Do we ignore the taxes for everything? Are we going to double dip on the taxes for everything? So it's something, again, you have to be aware before you go into that mediation or negotiation. So you have everybody has transparency and we're all on the same page. And that's how people will get to better agreements in record time.
For sure. And so this is why we want people to slow down. We always ask our clients to slow down. I think everybody wants to settle, right? So when you hear the word mediation or settlement, there's hope there, right? But you need to settle down, not to create conflict because everyone wants to move forward quickly, even people on your own divorce team, not to be difficult, not to re-litigate every point, but to make sure the agreement everyone is signing actually says what they think it says and does what they think it does.
Yeah, because you're speeding up to wait, basically.
That's so true.
It's always the person who wants to get everything finished fast. They're the ones that have all the information in, they're ready to go. And gosh, I love that. I wish everyone was like that. But they're going so fast just to sit and wait for the other side.
Yeah.
So know the cadence of your case and stick to that. Don't go over the speed limit there. Just slow down. Wait till the other parties put in their information as well. And I know this is where I always talk about patience is your best gift to yourself in this process. And listen, I am not a patient person, so I know it's very difficult. But if you can gather up some patience for yourself, that'll give you the flexibility to slow down.
Yeah. And, we often hear in the beginning of cases when people are exchanging their financial disclosures, and we always say, there's a lot missing here. Where's this documentation? And more than not, we hear back from counsel, well, we'll get that before trial. We'll get that. We'll get that. But
Well, how about the clients that want to change their expenses to the very penny because they're updating their state affidavit or deck or whatever your state calls it. And we're like, wait, what? You want to change it all again? Where's your spouse's? And then the spouse doesn't even submit theirs.
Right. It's very interesting when you even look at dockets as to what's been filed and not been filed. I was recently a part of a case in Texas where there was a financial disclosure presented by the spouse. And then there was like a list of other assets that wasn't connected. Like the disclosure didn't say everything else is on Exhibit A. There was just this Exhibit A. So, I said to the attorney, I think it's important that that Exhibit A be connected so that the spouse is verifying that all the assets were disclosed. Do you know it took probably 6 months? And of course, they said, we'll get it at trial. But the client insisted, to her credit, that we needed this information. It took more than 6 months. And by the time that Exhibit A was attached to disclosure, there were 10 additional accounts added to that exhibit when the spouse had to verify that this is all I have. So that was a lot of money and a lot of assets that would have gone unnoticed for quite some time.
Mm-hmm.
Yeah. So what should be included in a divorce agreement? It depends on the case and must be handled with your attorney, of course. But from a financial clarity perspective, there's several categories that you should be thinking about. First, the agreement should clearly identify the assets and debts being divided, including at least the last 4 digits of account numbers. You should be very specific about that. That means the real estate, bank accounts, retirement accounts, all assets should be clearly defined. Second, the agreement should state values and valuation dates as to on what dates these assets were valued. Third, the agreement should explain transfers and deadlines. Who signs what, who prepares the QDRO, who pays for it, when does the refinance need to happen? So I was saying before, what happens if it does not happen? Who removes whom from the debt? Fourth, the agreement should address tax considerations. Fifth, the agreement should address support clearly. If there's alimony or spousal support, the agreement should state the amount, duration, start date, end date, payment method, modification terms, and any conditions that affect the obligation. Sixth, the agreement should include mechanisms for cooperation and enforcement. Signing the agreement is not always the same as completing the agreement. If someone fails to sign transfer documents, refuses to provide account information, does not cooperate, the agreement should anticipate then, well, what would happen next? What are your options if the agreement isn't implemented?
The long and short of it, you need to read the agreement line by line and make sure you understand everything that is said. And if you have questions, you need to ask them before you sign the agreement.
So in closing, a marital settlement agreement is one of the most important documents you will sign in divorce. It should not be treated as a formality after mediation. It should not be rushed because everyone is tired. It should not be built on assumptions, and it should not leave major financial terms open to interpretation. The MSA is where the settlement becomes real. So before you sign, ask yourself the questions we posed above or earlier in this podcast. If you cannot answer those questions, and if the answer is no, then it may be time to pause, verify, and model the settlement before moving forward, because details do matter. And in divorce, the details are often where the outcome is decided.
And feel confident in knowing that a document-verified financial clarity plan helps you make informed decisions instead of fear-based or pressure-based decisions. And it'll go a long way if you're trying mediation.
Thank you for joining us today on We Chat Divorce. If this episode gave you clarity or a new question to consider, please pass it along to someone who needs to hear it.
And if you found value in today's conversation, take a moment to like, subscribe, and leave a comment wherever you are listening. Every share helps us reach more people searching for honest, financial grounded answers.
Learn more about us at mydivorcesolution.com.
And until next time, remember that clarity is power. Make your decisions with confidence, with verified information, and with right people in your corner.
Thanks for joining us on another episode of We Chat Divorce. We hope this episode was informative and supportive on your divorce journey. If you're looking for more support for navigating divorce with confidence and clarity, head over to mydivorcesolution.com for more podcast episodes, divorce events, and resources for your divorce. We'll see you back here for our next episode.